how would you be excited around what's your sort of level of excitement around the opportunity to build custom stack of capital for a lot
Mm,
of the businesses that we see, right?
right.
Going beyond effectively just, hey, we're equity investors, we're gonna do X, Y, and Z, and then let's go about it.
Yep, yep, yep. Um, okay, so kind of a few pieces of context. So I really hate kind of labels as a concept, right? So I've always found it awkward to kind of try to describe what we are, because we do VC. It's kind of a core of what we do. We also have a private equity practice, and the two may seem unrelated, but the way I see it is you need to understand the nature of an investment management firm's business. It's very important that founders understand the nature of what our business and every other investor's business is like, right? And just think of it through simple maths. Is if a firm manages 100 million, so to speak, typically they take 2% a year in management fees from that. Their responsibility is to use that 2%, in this case 2 million a year, which will be fixed for 10 years, in building out a level of infrastructure that is fit for purpose for what they're trying to invest in, right? Okay. The problem is 2 million doesn't get you far if you want to build a very good infrastructure, right? It builds you a good infrastructure for a very specific purpose if you're very focused, but you cannot build a very strong infrastructure. Now, the problem in VC is that it's a game that doesn't scale well, right? Especially in emerging markets at this stage of their development. Meaning, if I went the simple maths again, it's useful for listeners to understand this, is if I'm trying to 5x, let's say a 50 million fund, okay, and assume that I own 10% of every underlying company, right? To 5x that, those companies collectively will need to be worth $2 billion at the end of the 10 years, at the end of the fund's life. Okay, that's what investors in theory should be willing to underwrite. You have to be able to prove that you can do that. Okay, 50 million is roughly the right size for the set of countries that we're talking about, in my mind. Where the markets are at this stage, it will be more. The requirement could be more going forward. But the problem is, on 50 million, that would imply $1 million a year in revenue. You can't still build out a very good team, a very good infrastructure. The reason I talked about in your first question as to where is the continuous opportunity set it's also in private equity. The benefit of private equity is, as opposed to us where in VC we write $3 to $5 million investments, in private equity we write $40, $50 million investments. It allows us to operate at a scale because the IRR expectation from our investors is much lower, and we know we can achieve it. But there, for example, you do 200, 300, $400 million funds, right? That gives you a scale and permanency that you can then really build out a fit for purpose infrastructure for the collective of, in my mind, what we're ultimately trying to do is just be a little bit more efficient in how we allocate capital in emerging markets, because the history of it hasn't been too good, right? Whether that's in technology, we happen to believe that the foundational core of the future of these countries is technology and its infrastructure for all the reasons that we've discussed. But we don't. But what effectively that implies for, let's say, technology companies, we say, okay, we invest early and we can invest up to 3 to 5 million to try and have around 10% ownership. And we, for our funds and for our continuous funds, will be able to continue to invest up until, let's say, Series B. But we will overwhelmingly work our arse off to make sure that there is a balance sheet, a coalition of balance sheet that we can access for whatever round is necessary, for whatever funding is necessary, to get you the funding to be where you should be, right? So that's why I mean, obviously it's just self-serving because I'm talking our own book, but I think that's what you need to go for. You need to go for a scale and a durability, right?
Yep.
And ultimately, what we're trying to kind of solve for is what are the most strategic, important assets in these countries to build and own for the next 20, 30 years. Right? Whether we invest in that through VC funds, PE funds, co-investments, as long as we have access to balance sheet to do it, that's really what I guess ultimately what I like to think that we're trying to solve for.